Hi guys, it's Mark here at Teslary, and Tesla closed green for today. $250.22 was that price, which was an increase of $3.84 from yesterday, or 1.56%. And of course, as you probably know, Tesla has been outperforming the S&P 500, and I guess that's not too much of a surprise, and we'll look at it in a couple of minutes. And really is the seasonality is playing out, and there's a little bit of kind of underlying Cybertruck anticipation that's going into this this price action as well, I believe. It was kind of muted a little bit during the middle part of the day where it actually where it did kind of close the gap. But I think it's really because it's kind of like a balance between like that bullishness that retail has in regards to the release of the Cybertruck. But from kind of the institutional perspective, it's revisions lower for deliveries and production numbers that are going to be released on Monday. And I think almost, going into the end of this week, not many people, not many analysts are revising those numbers down in light of all the factory shutdowns. So it is kind of good in a sense that we've had some action to the downside a little bit as those revisions came in. I mean, there's a good amount that have been revised down in the past 2 or 3 days. So as long as we can kind of rip that Band-Aid off and, help, not help, we can't do anything about it. But if other people help themselves understand the situation a little bit more, because I think they're kind of sleeping on the fact that we've had those transitions to the Model 3 production in Shanghai to, of course, the Highland version. And we've had shutdowns for the Model Y line and Cybertruck line here in America in Giga Texas. So that could be a good thing that we just kind of get that out of the way. We saw some pretty sharp declines even just Wednesday when we had that really sharp bounce off of 235. And overall, I mean, this is the best we can ask for in what was, that's one of the worst months, maybe one of the worst Septembers the market's seen in a long time, other than, of course, last year maybe. But it was a really, really bad September. That going into September, there's this narrative that was like, okay, we front-loaded some damage in August. Maybe this September will be a little better than what the seasonality suggested it would be, but that was not the case. And the market really, really did not react well to the concept of these yields going higher and higher and higher. The dollar just increasing. I think the dollar now, the DXY might be 11. We can look at that real quick. 11 or 12 weeks. If we go to like a weekly time frame, I wonder how many weeks the Dixie has been green for. Well, it's been green for many, many weeks. That looks to be like 11, and that's a record we probably haven't seen for almost 10 years. And you can see that we go back that even, okay, it must be here in this area in 2014. That was probably the last time we saw such a consecutive increase in the dollar over other currencies in that basket for DXY. Which really, of course, puts pressure on equities. And we would talk about how this really affects multinational companies the worst. But really, what we're wanting to see is this yield break down even more. As the yield kind of breaks down, that's the only way and hope and prayer that you have for equities to go up. And what do we really need to see? We're still kind of above an area that is still really oppressive to stocks and Tesla and really any equity. And it's around the 4.45 to 4.5 area. Like this area, I'll draw a box so you guys can maybe do it on your own charts. This is what we really need to see broken. If we can get this broken, and I mean like really breaking underneath this area, that's going to be really important. You can see how it kind of respects the 4.5, keeps the yields above it, bouncing off it, and sending stocks lower whenever it gets near there. But if we can see some really strong moves down in yield, I think that will be beneficial. I mean, how does that happen? It really just needs to come to a realization that there's no more hikes and that cuts are coming sooner than expected, because we saw with inflation today, the PCE, inflation was fine. I think we saw that month to month that we were wanting for core. Expectations for core was what? 0.2. We got 0.1. That's all that matters. I don't care about that. We all know the headline sucks. 3.5, which is an increase from month to month. I get it. Understood. But we don't care about that because fuel costs can come down. Food costs can come down. But non-housing services coming down on the core reading, it's great. When it comes to shelter coming down, that's what matters. That's what's going to get people really excited about the market again. If we can continue to see declines in what is essentially wage pressure on inflation. Basically, not enough labor in the services sector. That's really keeping wages really heightened. And if we can just mute that a little bit, keep it flat, and make very slight drops over the course of the rest of this year, maybe we can get some cuts in the early part of summer of 2024. And we already know that from the CME Fed Watch that there's no calculation. There's no, how do I say this? Everyone's betting that there's no more hikes anymore. Remember when it was for the November meeting, it was like a 70%. Now it's like 80 something percent. So that's really good. Let's go back to Tesla. So we're kind of predicting that the higher EM was going to be around 255, and we got there really early, and it was a sharp rejection off of 255. So if you have 255 as your higher EM on your chart, you probably know when it gets to that, it's getting out of the range of what the market's really wanting to accept based off, their options action that they placed, options orders that they sold last Friday. They really don't want to get into that. And so keeping everything under 255 is beneficial for their options that they probably sold. They probably sold 255s. They don't want to pay out on 255s, and that's why the stocks go down. I mean, Tesla is so influenced by options action that as long as retail is really invested in playing Tesla in a very bullish way, those moves to the upside, they will get capped consistently. Moves to the downside, they don't care. They'll let it drop through the floor. They really don't care. But to the upside, I would say just think about it like this. If you were to track the open interest put call ratio on Tesla's options this week, there were times where it was like 0.6. It's almost like there was double the amount of call interest and put interest. And that's just not natural. When you look at all the other tickers, like especially the index tracking ETFs, they would have put call ratios where there's like 2 puts to 1 call, which is a little bit more that's understandable because the whole point of a put is to hedge a position, and they know the market's going down and they're hedging, where it's almost like based off the put call ratio of Tesla that you see on a consistent basis, it's like people aren't hedging their positions at all. That's what's really interesting. It's like no one's hedging at all. And so these sharp drops in prices that you've seen over the past 2 or 3, 4 years, or basically all of its history, you can almost assume that no one is hedging their positions in the way that a normal person would hedge if they had holdings in the S&P 500, if they had holdings in the NASDAQ. That's just super surprising, but really not surprising. The bullishness is really out of control when it comes to Tesla. And it really, unfortunately, keeps Tesla's price muted. I really think it does. Okay, so as far as a higher EM and lower EM, I kind of, I always like to kind of pin it to like a $5 increment. It's not really the exact calculation of what a lot of other people do for their EMs. But as you can see how it really makes more sense to kind of understand that the options strike value should really play a role in the calculation of an estimated move. We saw that basically multiple times in its history, I think, basically all the time. So you can see it here, how it bounces from here. You can see how it rejects off 255 in the early part of the week, rejects 255 today. This makes sense, right? So I expanded the volatility for this week coming up because what do we have? This is going to be the deliveries and production numbers coming out early on Monday. And look, we really don't. You probably listen to other channels and maybe you read the news, and these estimates are all over the place. They're all over the place because no one has a great idea on how many Model 3s were in Europe, how many Model 3s were in China, how many Model 3s were in America that were able to be sold before production slowed down. We don't know how much Model Y was really affected with a 3-week shutdown in Texas for the whole quarter when you add it all up. And of course, we don't have Cybertruck released this quarter. Unfortunately, this is the end of the quarter. Tesla or Elon back in the early part of this year was talking about how the Cybertruck would be at least have a handover event at the end of Q3. Some people say now it's Q4. Obviously, it has to be Q4, but it has to be, right? Anyways, let's look at the we'll do some brief news and look at the story that is deliveries and production numbers. Okay, so here's an article from Investor Business Daily, and so they were saying before this week, most of the analysts were averaging, or basically the consensus was around 466,000 cars which would be a little bit higher than last quarter. And we also know at the same time that's probably unlikely due to the factory shutdowns. Now, this week you can see here, however, this changed this week where analyst consensus would drop only 2% down to 461, a little bit high. But I think what happened is it got burnt last quarter when they were down, 10, 15, 20,000 on their estimates. I don't think they want to do it. So they're giving us a little bit of a harder number to beat, which is above a lot of people's consensus that track this within the Tesla community, not from the Wall Street analyst side. Yeah, so that's gonna be interesting. Cybertruck in focus. This doesn't really mean anything. This is more of a sentiment factor, but here it is. You can see Piper Sandler cut their prediction down to 445,000, and Citi brought it down to 450 from 468. Emmanuel Rosen from Deutsche, of course, we talked about him before. Whatever, I don't like this dude. 440,000 for him. He's also the guy who said it has downside risks in 2024. Yeah, I mean, rates are so high, bro. Like I don't understand. But what other people say, like Jeff Lutz, rip the Band-Aid off now. Let's just get it over with right now. And so you can't keep drilling this news into our head all the time about your earning estimates are going down because we don't see the same type of growth. The rates are too high. The economy is really bad all over the world, and exposure to China risk. We've heard it for 50 years. So Baird brings it down to, this is one of the lowest, 439,000. But he does also note that this is planned downtime. This is not supposed to be a surprise. This is something that we talked, and Elon talked about it just last quarter. But the thing is, that confusion is real. No one knows how this is going to go. The great thing about this is typically when we talk about deliveries, that's usually going to be on a Sunday morning, like 8 o'clock in the morning on Sunday, 2 days after the beginning of the quarter, right? It just happened to line up on a weekend most of the time. But now we have a chance. We have a chance here to actually use a pre-market trading situation to maybe hedge your downside. So what can we do? Let's say you have margin activated on your brokerage account or your investment account, and you're going into Monday. Okay, it's Monday. It's 7 o'clock in the morning. The delivery numbers hopefully haven't been released yet. Okay, and you're sitting there and you see Tesla's up like 0.2% or something, right? Slightly bullish, very slightly, or even if it's negative. But it's giving you the opportunity to hedge your position. If you can hedge it a little bit, because we talked about it all the time, it's so difficult going into a Friday into a Monday data drop, or Tuesday once a data drop, because you lose 2 or 3 days of theta of your options just being whittled down. Because as time goes on, options lose their value. So even if you're to buy a put like on Friday, you can lose a lot of value if it opens flat on Monday, even with deliveries going, affecting it basically nil. And it just maybe up or down 1 or 2%, like then you just lose. You can, depending on your position size, you can be losing hundreds of dollars on a couple puts. But if you figure that you're willing to lose like $100, $200 on puts for every batch of 500, 1,000 shares, you can just buy TSLQ Monday morning before the numbers come out. And if you're watching the numbers and the numbers look okay, you can just close out your hedge. That's something that's really nice, that you can get these. You can get this data dropped on a trading day. So this could be beneficial for people who are a little bit more active in trading. They reduce any potential downside. Like if you see a number come in and you're like, okay, let's see what investor relations released for Q3 numbers, and it says like 424,000. You're like, okay, I'm keeping my hedge, right? If it's 448,000, you're like, okay, I need to sell this really quick to get out of my hedge, right? At least you can do that. For puts, you can't do that. Like you can just get destroyed. Well, keeping on the same subject of deliveries, we can kind of see what the analysts are, the consensus that Tesla accepts from its analysts. Gary Black put together a nice email, X post with an email from Martin Viecha, which is the investor relations head. And so Gary is thinking that he's thinking 445,000, right? And the consensus here is around 455,000. So you can see this number right here, Q3 2023. That's going to be 455,000, and that's a lot higher. I mean, not even, it's higher than what a lot of people think, and it's because most of these banks and analysts didn't take their number down. We had about 5, 6, 7 of them revise their number down, but yeah, that's basically it. So we can hope and pray, but like I said, at least the benefit this time around is it's a trading day that we can it's a trading day that we can do something about it instead of it being on a weekend. So Sawyer Merritt, Sawyer Merritt's been following the UAW news, and I know we talked about the UAW a lot because what is the narrative when it comes to UAW is that the idea is if the legacy autos suffer, Tesla should benefit from it. But we also track that's not really reasonable because the legacy auto people they're not doing so badly against the market in general, and they're not doing so badly against Tesla. And I have the whole video about that. You can watch it on my channel about why the legacy auto stocks for GM, Stellantis especially, does a little bit better than Tesla over the course of the last month since the strikes happened, and really since the past year and a half. They've actually been doing okay. But Ford top executive says 300,000 to 500,000 supplier workers may face layoffs in the wake of ongoing UAW strikes. So this is something I wanted to bring up because it's something I never talked about before, and maybe it's something I never really considered the scope of it because I wasn't really familiar with the industry. But the supplier chain that provides parts and services to the OEMs, they're not all covered by the UAW. And so, it's a much bigger part of the labor force when compared to UAW. UAW, when it comes to specifically the auto workers, we're talking about 140,000 maybe auto workers in the UAW. But when it comes to supply chain and supplier workers in the supplying companies, they have hundreds of thousands more workers than the UAW. And this could either put negative pressure for Ford as far as not being able to run factories, and this could be a negative pressure on their stocks. This is something to really keep track of if you're long or short these equities. This is something that I was not really factoring in, but something interesting to think about. Let's talk about the overall market sentiment. This is kind of a tracking site that measures the bullish bearish stance of people who participate in this membership. So the members here say about 40% of them, 40% of them voted that they're very bearish on their sentiment for the overall this overall view of the market. Now, if you click on more historical data from this site, you can see that the 40% bearishness is very, very high. Not seeing a similar number until when? May of this year, before the rally. Isn't that really convenient? So when did Tesla start rallying really, really hard? It was in May. When did we reach a similar value? This week. So if the market is too bearish, why would the stocks go down to take it? Because if you're bearish on anything on the market, you might buy puts. Maybe you have a bunch of SPX puts, going into the end of October, and you're trying to hedge your portfolio. Well, guess what? If everyone has the same concept of a bearish outlook on the market and everyone's hedging their bets, then what's going to happen? The market should go up, to destroy the puts that you bought because it's been sold to you by somebody and they don't want to pay those out. When it gets too bearish, maybe that's when people want to go long. We talked about how we're seeing a bottoming process form on the RSI, on the S&P 500. We'll look at that in a couple of minutes as well. On Zero Hedge, they had this other tracker of sentiment when it comes to stocks. So the bearish sentiment spike almost as big as 2020's when stocks crashed 30%. Meaning that if you look at this chart, and when the amount of bearishness gets to this level, which is around 1.9 on this scale, it basically reverts. And what happens when bearish sentiment reverts? It means stocks go up. And you can kind of see that here in the May area, right here, goes up. And you can see it recover in the spring of 2022. You can see it recover also in October and September here. And you can see the rally. But okay, so this is something that's really, really interesting because if we can get a bounce based off the overall bear sentiment, that's good. That can last a couple days. I don't know how long you want to play long for that type of scenario, because let's look at the seasonality of the S&P 500 and really understand, are we diverging from seasonality yet? And if not, maybe we have to be wary of any rallies that we see. Okay, let's look at it here now. So this is the chart of the S&P 500 on the daily chart here in candles. And of course, we have Tesla in comparison in an orange line. Tesla on top as far as the equity clock seasonality chart that we've been looking at. S&P 500 seasonality on the bottom. So looking at October on S&P 500, we know that it should close low for the month. And it did. You can see this is all of September. It closed low for the month, and the drop was something like, what was it? 5.6%. And it closes the month very badly. It enters the month of October a little low, yes. And then by a couple days in, it goes up. And it goes up by what? Maybe 1%, maybe 2%. But it's a small rally. And looking at Tesla, let's see how Tesla performs. So at the beginning of September, it should be high. And at the end of September, it should be the same level. Now, we did have a stronger rally. You can see there's a rally in the middle of September here that makes a new high. This was a little bit more exaggerated, of course. This was 10% for Adam Jonas's upgrade for Tesla. But you can see that, yeah, I mean, like from the beginning of the month to the end of the month, it's relatively flat, a couple percent difference. So you can see the seasonality is still playing out, right? We're still playing out the seasonality aspect of the chart. What's going to happen typically going into October? It looks like Tesla sells off a good amount, 3, 4, 5, 6%. And that could be because it's always reacting to what? A data drop that happens at the beginning of a quarter every single time, production numbers and delivery. And so based on seasonality, typically it's always sold off on those numbers. Could be some other reasons, but this is a historical analysis for like 10 years. So this could be just because the reaction to that particular report. So everything when it comes to seasonality, it looks like it's doing its thing. Maybe one more day bad on the S&P 500 to a very small rally that gets shorted again. And for Tesla, weak into the first 2 weeks of October, pretty weak. And with small relief in the middle of the month to sell for the rest of the month. So the bottoming process for Tesla looks like it doesn't really, find its legs until November, where the market itself is actually pumping pretty hard on average. And you can kind of use this data to play the long side away from Tesla and pay the short side on Tesla. So you hedge your position with Tesla, go long the stock market to try to capture upside if you're not seeing upside on your shares of Tesla, right? That kind of makes sense. Now let's look at the seasonality. Let's look at the RSI on the S&P 500. So looking at the bottom of the screen, you can see that we're looking at this really oversold RSI reading that we didn't see until we basically bottom on the S&P 500. I'm gonna turn off Tesla, so this is kind of confusing. You can see that over here, this was the only time we had a reading this bad on RSI. Is it really surprising that it happened in September on both times? It's not that surprising. If we ignore the January drop in the S&P 500 in 2022, you can see back in October and September of 2021, it bottomed again. So you see how this works, right? And it's just seasonality. You can even see here when it goes into the end of September, it has a very small rally. Let's see how small that is really. 3.6%, and then it sells off again. You see that right here, up and down over there. So let's look at our chart for the S&P 500 that we have so far. So on an intraday basis, not on a closing basis, on an intraday basis, we rallied about 2.2% before selling off. If you want to go from close to close, it's really not that much of a rally. I mean, it's really pathetic actually. But there was a small rally. And what does a rally typically say it is? It's about 2%, 1%. It's really not that great rally sometimes. Could this be it and that we sell off into October? It's very possible. It's very possible. But I would say that was a good number we had in inflation today. I really think that was a decent number when it comes to inflation. And it's possible that the market didn't want to give an easy day to the traders, even with a good number. They had basically one opportunity to get out of their trade in the morning if they're long. And that was it. Didn't have to go short for the rest of the day. But Tesla's still looking okay. But like I said, the first week in October can be pretty brutal based on seasonality and could be a reaction to a bad delivery and production number coming out on Monday. So just something to keep an eye out for. And that's it. Thanks for watching. Bye.